Hey everyone, this is Richard Yi. Today is February 13th, 2012. So in my last video blog, I talk about why I think that global central banks are likely to proceed with more quantitative easing in the future, which will presumably will result in global currency depreciation. Well, they might not depreciate against each other, but definitely against real assets. And just hours ago, we have Bank of Japan announcing that they're going to expand their asset purchasing plan by another 10 trillion yen, which is equivalent to 130 billion US dollar. And according to Bank of Japan, the reason they're doing this is to counter-react to the economic slowdown in the last quarter of 2011. And given that all of the additional 10 trillion yen will be used to purchase government bonds, in the short run, that is going to provide a more flexible way for the Japanese government to finance and repay its debts. However, for the economic aspect, I don't expect this additional stimulus, additional purchase program, will have much of an impact on the Japanese economy. Because face it, all it does is to increase the GDP, right? I mean, number is a number, but what is really behind this number that's important? When you think about it, when the currency, Japanese yen, is debased, well, sure, that's gonna make the Japanese export more cheap, right? So, well, according to theory of how it works, assuming other currency don't really change that much, Japanese export will be less expensive, so more goods will be exported. So that's according to the theory of how it works, it will boost the Japanese economy. However, this is very similar to the broken window fallacy, right? What it's about is that, every export, for Japanese in this case, every export you have to import raw materials and process them, and therefore they add a higher value to the materials and export. That's how the Japanese economy basically survive internationally. However, if you make the if you make the export cheaper by debasement of the currency, at the same time, you are actually making import of the raw materials a lot more expensive. So I think this additional 10 trillion is more caused by political pressure rather than from the economic aspect. But gold price actually didn't gain at all from this statement. Well, in a sense, it's like gold is depreciating against paper currency, right? Because if, say, global currencies start to depreciate and gold price stay the same, well, in a sense, you're using the same amount of depreciated currency to buy the same amount of gold. Well, that's like, gold has been depreciated. And given the future outlook of global central bank actions, likely there will be more quantitative easing or likely policy pursued by global central banks, and you're gonna see their balance sheet start really dramatically expanding. Therefore, makes gold even more undervalued. And also, yesterday we have news coming out from Greece saying that they passed the austerity measure. Well, I mean, some market viewers kind of take it as a surprise that they actually passed it. But I mean, look at it. It's not really a surprise if you understand the matter. Well, first we should make clear that Greece cannot really finance itself on the normal, just on the market, right? It cannot just borrow money from the market anymore because, face it, the interest rate on those Greece bonds are so high that A, the Greece government cannot afford the interest payment, and B, I mean, many lenders, they're not willing to lend. And second, if Greece doesn't, cut the necessary spending, meaning accepting the austerity measure, it's not going to get any bailout, meaning it will default in March, right? When it defaults, it's even more impossible for the Greece government. So, I mean, no matter what disagreements the two parties have, they will eventually reach agreement to cut those necessary spending in order to receive more bailout money from the European Union. Well, still, cutting something is better than doing nothing. However, what's more scary is the mindset of the Greece people, right? Because, I mean, just look at the riots before the austerity vote yesterday. I mean, these people actually think that they have the right to all those entitlements and all those free services provided by the government using money from some other countries, borrowing those monies, right, and pay interest. Anyhow, that's it for today. Thank you for watching, and please subscribe, and I'll be blogging again soon. Guys, take care. Bye.